Mish,
Yes.
how's the Modern Family? I do recall we haven't talked in a while, but I started focusing on that XRT, that critical level you pointed out. I think it was 78, and the market once it took out 78, it was kind of a Niagara Falls trade. Um,
Exactly.
do you think that led it? And is it a possibility that that could be a leader if we turn?
Well, leader might be, at this point, we would just like to see the retail sector follow along. Obviously, yesterday was a pivotal day with the extraordinary earnings from Meta and Microsoft. And yet we've seen in the retail space some trouble, like if we're looking at restaurants, McDonald's really was terrible. Estee Lauder was not great. So this is a situation right now where the consumer is the sector that let us down. Really, if you look back at January and you look at XRT, it was one of the first areas to break down under that 50-day moving
Yeah,
average. So we kind of knew
right.
even before the tariffs became so blatant that the consumer was not necessarily buying into the bullishness that so many people came into this year with. And now, after it bottomed, the interesting thing was that if you're looking at a monthly moving average, it had broken down under the 23-month, of course, in the early part of the year, which is a 2-year business cycle showing contraction. But that's different than recession. Recession would be if it broke down under the 6 to 8 year business cycle or the 80-month moving average. It broke it like in an intraday situation on that April 9th, but it came
Hmm.
right back when it held 64. So I was already saying to people, we don't see the typical signs of recession looking at the consumer. And of course, that's where you really have to look the most because it's holding up that long-term cycle. And the only time it's been down below it in a decade really has been during COVID. So I guess
Okay.
what we have to say right now, and you have a chart up there now, right? Is that it?
Yeah, yeah.
Okay.
What really grabbed my attention is unlike most stocks at the April low, we diverged on the XRT.
Right.
And you could go to almost anything else, and that didn't happen. So we already have one divergence. If we had one more sell-off, we'd have our second and like a three drive. So I'm paying attention to this. I know some people always they're starting to adjust their volume because they're hearing me want to talk about buy. They're hearing me talk about wanting to buy things.
Well,
They're
we've been
usually hearing me always want,
to sell things. Yeah, well, we've been
you
buying
know,
things for the last, well, since the April 9th low, because what's interesting about this pattern right here is that if you look at that April 9th low, the next day was an inside day. And then it closed above all of that the following day. So that to me
yeah,
is sort of a classic reversal
climax.
pattern. Right.
Yeah.
So I started to feel a little bit more optimistic, number one. Number two is, like I said, it held that 64 after that initial flush. That's that 80-month moving average. And now, of course, with the rest of the market being happy today, after these earnings reports, we
Yeah.
have to see it take out at least that 200-day moving average. And then if you look at a monthly chart, it would be the 23 months. So we're in that 70 to 72 level now is critical for XRT. So everything that we're buying, and we bought early. I'm a little bit hesitant to like start piling in right now, because I think now your risk is not as controlled. But if we can get through that 70, 72, I'll have a lot more confidence. If we
Yeah.
cannot get through and we start to roll down, I would probably be a little bit more cautious, or maybe a lot more cautious. Because I heard you guys talking before, there's still a lot of things we don't know. We don't know what's going to happen with supply chain. We don't know what's going to happen with tariffs. We saw the GDP, but of course, percent already said, oh, that's
We
probably,
don't know nothing.
we know nothing, right? We just,
I don't know nothing. That's
right,
what
but
all my Italian friends' fathers said. This
right,
is
but
what you say anytime anyone
well,
asks you a question.
exactly, except that what we do know is price. That's what we know. I mean,
Okay.
that's the key of a trader, right? Is to put the
Yeah.
blinders on for the headlines and just watch the price action. So not only is retail, I mean, retail's been lagging all along, and that's fine. You know, this is a growth versus value market when it's bullish, and we've seen that forever. But, you know, considering the fundamentals now, you have to watch that retail, you have to watch that consumer, and you have to watch transportation. So let's go to IYT, another key member of the family.
Because IYT is probably going to have some issues with trade slowing down, right?
Well, it's already having issues because, you know, there's issues with the trucking, the whole trucking situation. You know, the ports are supposedly really slowed down. Deliveries aren't coming in from China. You know, these are all really important things to the economy. And we know the market is not the economy, and we know that the market is forward thinking, but you still have to have a deduction of what could happen based on retail, transportation, and small caps. And look how much this is lagging. And we just saw XRT was close to that 50-day moving average. Is that the 50, the green one? No.
Yes.
Yes. Then, and look how far this is. So, you know,
and look at the momentum reading at the low compared to XRT, which was diverging the second time down here. This one's confirming. So confirmed price and momentum is a much more negative signal than what you had going in XRT at the low. You could just see the difference, right? It's glaring, the difference. So you can't just buy the market. You know what that tells me? You really have to be a stock picker now. What do you think, Mish?
But there's a couple of other things that I think are really important that I would love to, you know, basically share with your viewers is the question.
You want the screen?
No, I don't.
Oh, okay.
No.
All right.
Recession, stagflation, or worse behind us, going into some period of optimism because there'll be economic growth. As I said, traditionally over the last few years, people have been very, very used to AI leading us through. Technology is the future. And of course, all of that is true. All of that is true. But we still have some issues even with the chips. So if we look at, before you even look at SMH, I just want to explain the narrative here. There are a few things that you have to watch right now to determine whether or not we're going into a recession, whether we're going to stay in sort of this stagflation, or whether we're going to go into some kind of period of growth or recession and inflation, although that looks the least likely right now. Number one is we've been watching the gold to silver ratio. That thing screamed a couple of weeks ago, got up to 105, 106. And then when that reversed, I thought silver would be a good buy. If we're going to actually avoid recession, silver should hold up. Against gold, it should start to outperform from the ratio standpoint. Gold has come off and silver has come off. So even though the ratio has narrowed, I'm still not certain that silver's got what it takes to do what it needs to do to prove to us that we're not going into some kind of recession. Let's face it, gold flight to safety, silver somewhat of a flight to safety, but really more an indication of industrial strength. And we know that's not great. That's number one. Number two is, like I just mentioned, XRT, IYT, they have to stay in the game. These are the things we want to look for whether or not we're going into recession. And then thirdly, I mean, really, we have to look at the bonds and not just the TLTs, but the TLTs' performance against the SPY. And right now, the TLTs are underperforming the SPY, which is good. That's a risk-on situation. So the best we can say right now from the conclusion of these ratios and everything I just mentioned is we're still in a real economic slowdown. We haven't quite entered the recessionary zone. We're still more stagnating with some areas of inflation to be concerned about, particularly going forward in about 6 weeks from now when we see how supply chain is hit. And that's where we are. We're sort of stuck, which is why the Fed doesn't want to do anything. And of course, the dollar is a factor, but you know, the fact that it's bouncing, maybe it gets over 100, maybe it goes to 103, 104. I don't think it's going to go much higher than that, but it's not collapsing. So all the and junk bonds are doing okay. All the classic signs we're seeing right now is we may have bottomed, but That doesn't necessarily mean anything yet as far as what happens over the next few weeks until we see what happens, like I said, with silver, with retail, with transportation, with small caps, with long bonds.
Okay, so what's your belief why Besant came out or Besant came out and talked about the Treasury going into the bond market? What are they worried about?
I've heard through sort of grapevines that they're all really long the bonds, by the way, that they're in their own personal portfolios. I mean, of course, that's the whole question of insider trading, but let's not go there.
Oh, that's
Um,
interesting.
yeah, that they actually are holding a lot of TLTs. I've also heard that Sen was holding a lot of China and foreign stock, but I don't know if that's true because he seems to be so anti-China when he speaks. But nonetheless, what they really want is a couple of things. We have a very high debt. People have stopped talking about that. Doge was unsuccessful, let's face it. Maybe it reduced it to a degree, but when you're talking billions, when we have something like 35 trillion,
Trillions.
it's
Yeah.
nothing. And then in terms of what's happening with the tariffs, they brought in money also, but at what cost, right? So that hasn't really stopped the actual debt from expanding or at least from going down. And so the TLTs, in order to pay back that debt, you have to have lower yields. Otherwise, it's too expensive. So they really are pushing for the lower yields so they can pay back the debt and also so they can probably stimulate some more consumer spending because with these high yields, people are nervous about spending more money. There's a lot of credit card debt. We see the housing market slow. So they're pushing the Fed to lower the rates. The good news is that low rates would be a relief to some areas, and maybe that would be the thing that would help the consumer. But on the bad news is that it would also signal to the market that the Fed is now nervous itself about recession because it's seeing declining labor. We have that big number tomorrow. The
Yeah.
PCE is down, but it's not below 2%. That basically they're doing this because they're worried. And so that's the double-edged sword. And that's what makes, this puzzle so many pieces, but we don't really know what the whole is yet. And that's why you say stock pickers market. Yeah, you got to look at things that are sort of outperforming a little bit here. And right now it seems to be, obviously we're back to growth here, but let's take a look at SMH before I say more about the growth stocks,
Okay.
because that's also in my modern family.
Yeah, and I think that they could be the leaders. I was thinking we might get one more low, same reason, confirmed low here, but I'm
Now
sure
this
it's
is a
going to
bit
be up,
right. Now this is a
so
very interesting chart as well, right?
yeah,
Right. So now if you look at this, I think it's coming in right at 215, right
that's
there.
right. Yeah,
So
about
it's
four higher.
so it's going to tickle the moving average.
Yeah,
Um, 208 was an extremely important level for the month of April to close above, and it did because that's where the 23 month is. So while
okay.
the consumer is contracting from a 2-year cycle, semiconductors tested it but held it. So we definitely still see that growth is outperforming value, which is great for the market. We just don't know if it's great for the economy. People say, oh, tech is the future, but is it going to create more jobs? I mean, can we all,
Yeah,
everybody sit home and just, be on Facebook and use their NVIDIA chips in their Microsoft computers, and that's enough to keep them solvent? We don't know that yet. But the semiconductors still also have a lot of resistance, and they peaked out in July of
yeah,
2024. So we're 8 months later. Was that it? I'd like to
yeah.
see it get back over 220, 230. Then I would start to feel that this is not just a knee-jerk one-day reaction because of the euphoria of the earnings.
Okay, so if you covered up the title of this chart right here,
Mm-hmm.
and you're looking at this rally, as a trader, wouldn't you be looking to sell this rally, that it might be a failing rally up here? And this wasn't it. I mean, I had these targets, but um, you know, is it possible that we shake the tree one more time and take out this low by a shade, like 4,500, and then the big turn?
Very possible. Very possible. I mean, my original prediction coming into this year was that we would have a really shaky first half And then as we
Yeah.
got into June, July, we would recover and maybe wind up having the S&P close up on the year 3 to 4%.
Yeah.
Minor. And I'm
All
still
right.
going with that because certainly we're seeing all the signs. So that would definitely meet the scenario that you're talking about. And this has been a sell rallies market. And so, yeah, for right now, exactly. I'll just repeat it because it's so important. Watch the XRT, the consumer, watch the IYT, watch the bond market, what the Fed's big announcement is going to be, watch the junk bonds, and then watch that gold and silver ratio because
Yeah.
if silver's crashing, not good. If gold is coming down against silver, much better. Silver
Yeah.
can
That's
go up,
happening today. That's
right?
happening today.
Exactly.
So,
Yeah, look at the ratio right there. It's back under 100, but it's still
yeah.
pretty high. We want to see it
Yeah.
really get below 96 and then it starts getting
Yeah. Yeah.
interesting.
People would love to see this. We ever get back under 92, then you're talking a false breakout and more like 72. I've been telling people, it's not a complicated thing to do. It's not high risk, but take one of your gold coins and get 99 silver coins, 1 ounces.
Yeah, I mean,
And
I'm sorry,
go
go
ahead.
ahead, Bill.
No,
No,
that's
no.
okay. Because reverting back to the mean would be 60 or 50. And that would be a 40% move on just exchanging one coin for another.
Right. So that's also the other thing that's really interesting is if we look at 2022, which I can just explain it pretty easily, but if you want to go back to 2022, in 2022, in October, that was such an important month. Remember, that was the year where the Fed was aggressively raising rates and the market came off hard
Yeah,
after the whole
there it is.
post-COVID euphoria.
Yeah,
And in October 2022, the gold-silver ratio had peaked at that point, though, at 95, by the way, not nearly as high
yeah,
as right
right
now.
here. I'm showing it
Right after it peaked, silver rallied,
big.
gold calmed down, the
Yeah,
bonds rallied through the TLT, and the
okay.
SPY and the Qs, they bottomed, but they didn't really do anything for the next several months until the spring of 2023. That's when the market was finally convinced that the Fed was stopped and they were going on pause and everybody piled back in. So now here we are, 2025. We have the gold silver ratio peaked, it looks like.
Right, right.
Silver
Or
hasn't really
peaking.
peaking, right? Silver hasn't really taken off yet. The bonds could be bottoming, certainly if it holds over 89 in TLTs, that's a good sign. And the
Yeah,
SPY and the Qs are getting a bounce, but if it looks like 2022, they got a bounce, but they chopped for a while before they took off. And that's kind of the scenario you're describing is that maybe we don't have a major sell-off, but we're not going to go straight up, in my opinion, right now. I think you have to sell the rallies, you have to watch the chop. And then when we get a clearer signal of what happens with tariffs, what happens with monetary policy, what happens with our debt, what happens with geopolitics, what happens with our supply chain, then I think when the market says, where the worst is really behind us and we don't have to worry about all that anymore, that's when you're going to start to see a better, as people love to say now, generational buy opportunity.
okay. And that's, July. And that's when, if we don't have trade deals, we have just tariffs and no trade, right? 3 months from April, July.
Right, right,
So I
exactly.
think the market might be, not really ready to, be a moonshot until that is, you know, we know what we have, and we may not even know then. But I just want to say, like, the XRT, that 77 level, there are a lot of people that, they're proud to say it now. Oh yeah, I'm not bullish equities. I'm in bonds. I stepped aside, no damage. Yeah, they're acting great. They've been moving sideways for 2.5 years. Rip Van Winkle put the trade on and then took a nap. I've never seen the bonds in such a large sideways pattern. And if we ever took out 85,
Oh, disaster.
88, yeah, 88, that's a good area. That
Mm-hmm.
89 where it's at now,
89.
88. But
Right.
under here, we have new lows coming in TLT. And what if that happens with short-term rates dropping, but the longer-term duration paper rates don't come down; they actually rise, while short-term rates are coming down.
Well, that would be be a sure sign of recession on the way.
Yeah.
And then again, you'd have to look at the relationship between the long bonds and the S&P. If they were both crashing, then it might be just a kind of a liquidity crunch. But
Okay. Yeah.
if TLTs, if SPY is holding and TLTs crash, that would actually not be as bad. But if the SPY crashes at a faster velocity than the TLTs, that's your big recessionary sign. By the way,
Okay.
as I'm talking to you, when I got on with you, silver was trading at like 31.89. Look what silver is doing right now.
Yeah.
I'm looking at
Bringing it back.
the chart there, 32.35.
Yeah. Yeah.
All of a sudden gold held that 3,200. That was my bottom line area for support I wanted to see hold. And so right now, silver is, I don't know why I haven't watched the news. Obviously, I've been sitting here talking to you. Copper now is green. This day, like I said, the initial euphoria of the fact that we had these massive earnings and not such bad guidance from a couple of these big companies in the Mag 7. Oh, by the way, let's put up mags. This is a really another good piece of the puzzle in terms of where we're going, growth versus value, recession, stagflation, blah, blah, blah. Let's put up
Amazon. Amazon.
MAGS. Well, Amazon, right?
Oh. Oh.
MAGS. Yeah, let's put that
Okay.
because that represents the whole Mag 7. MAGS. I wrote a whole piece on this last night if people want to go find it on Twitter. And yes, I'm old school. I still call it Twitter. Just because I can't stand saying X.
Okay. Yeah, that looks pretty good.
Right. So this is where people are excited right now and starting to get very bullish. That Rubini, who is, a very highly respected analyst, that they're right now super bullish. But not necessarily, I don't follow anybody's opinion, but you can understand why. Inflation has come off in certain areas. My sugar indicator, sugar did not do very well. There was a big crop coming out of Brazil. The food prices are bottoming, but they haven't really gone up. Obviously, oil is crashing, which is good and also potential in recessionary. Natural gas, by the way, would be something I keep my eye on. I'm really into the energy space right now outside of all oil. I've been in long uranium for a few weeks now. Might get into natural gas today. Also, still kind of watching the solar space and even the EV space. This is where I'm looking, things that could avoid, when I say EV, American EV, like Rivian, these are the areas that I think are interesting right now. Of course, you want to take a real sort of short-term viewpoint that when things roll over, get out. But I am not all that convinced about this Mag 7 yet, even though it looks pretty darn good. You're looking at Cameco, right? I'm in actually URA, but that's a nice looking chart, right, Dale?
Yeah. Yeah, I'm watching uraniums. I like there's this royalty trust that I'm looking to buy cheaper if it happens. But
right.
Anyway.
So just to sum it up, because I know I said a lot, and I really want to.
A lot.
Yeah,
Man,
yeah, I know I'm like an encyclopedia, but this is my life, right? This is my life.
Yeah.
I mean, I have other parts of my life, but this is the major part of my life right now.
Okay.
Especially, I'm passionate about helping people because there's so much misinformation. And essentially, really, I said, I'm just going to say it again. You've got to watch. If you want to put a number on it, XRT's got to get through 70, 72. If you want to put a number on it, IYT, transportation, has to hold 60 and really get through like 62, 63. If you want to look at IWM, which we haven't looked at, my good old granddad, that really has to get back over 200, 202. If they don't, I really don't care what the Mag 7 does on the basis of these earnings. They will look back and say, oh my God, when I say they, I mean the investors that go, maybe we need to take some profits here. And then you'll see the sellers maybe come out again. Watch the silver to gold. That silver has to hang in there. That would not be good. TLTs, like you said, 85, but also 95 over that would be,
Yeah.
wow, really interesting. And watch the semiconductors. They just came off. They were at 215 when we talked. Look at them now, 211. So there's still cracks. And
Yeah.
so, be cautious. That's all. And if any of those things turn out to be really great, well, then we can change our mind. But for right now, sell rallies is probably still the thing.
What a great interview.
Oh, thank you, Dale.
Really
Always love
nice.
talking to you.
Really came through with a lot of pearls. I wrote that at the beginning of the week. There'd be enough pearls from our guests to string a necklace like June Cleaver had.
Yeah, well,
You remember June Cleaver.
I do.
All
And,
right.
we've been at this game for a very long time. I don't get ruffled very easily. I definitely, took a bit of a hit when everybody else did when I was caught by surprise, mainly because I was a little stubborn and I myself did not listen to my granny retail indicator flashing the warning. But
We all do that.
yeah, I've come back from there and now I'm in the protect my profits and not want to lose more money mode until I see more clarity.
Yeah, smart. There's wisdom. And we'll wrap it. You don't have to hunt for trades. They'll be so compelling, you won't be able to resist it. When
Exactly.
they'll come to you. So thanks, Michelle. I hope you have a great quarter. You and the team keep knocking the ball out of the park and hitting for a good average. Everyone follow Mish. Go to her website. There's a lot of great educational material that Mish provides. She has letters. They have webinars all the time. Really strong team, and it's really just three. It's Mish and her husband, and what's the other gentleman's name? I'm looking for.
Jeff Bish, he does
Yeah,
webinars all the time. He is
yeah.
a treasure trove of information.
So I mean,
Oh yeah,
all you
there's
have to
my
do,
go to
yeah,
market gauge, right? I
yeah,
write
go
a
to
blog
market.
pretty much every day. We have a weekend outlook that goes out where Keith does a video, Jeff does the content. We offer all of this to people without any cost. I'm on Substack now too, by the way. Yeah, it's probably not too late to read my outlook because it talks a lot about everything we just talked about now and also the vanity trade, which we didn't get into.
Yeah, oh, yeah.
Yeah, just I'm very, very communicative on X. If you go to
Yeah, and
you have any
all I want to know is how do I stay away from this guy,
the snake?
the Yinwood snake? What a scary, is that maybe algos looking for your stops right there?
Well, see, I mean, I don't want to get to, I know we have to end the interview, but I will just say this about the Yinwood snake. The last time we had it was in 1965. In fact, Blake and I had a whole interview on this a while ago, like I think in December. And so 1965, basically, as we got into 66, it was the peak of the market for years, right? I mean, it
Okay,
wasn't
yeah,
until 1982 that the market took off.
yeah,
So, we are coming into a fire cycle as we get into, if you like the Chinese astrology, which I love, we're getting into a fire cycle as we get into 2026. But right now, this is, what does the snake do? It coils, it strikes, it feels every
yeah,
vibration as it's on the ground. Think of these as great metaphors for what we're seeing right now.
yeah. Everything is, even the markets for life. Anyway,
Right.
thank you very much, Mish. Great talking to you, seeing you.
Thank you, Dale. Be well. And thank
All
you,
right.
everybody, for watching.
All right, Michelle Schneider, everyone, followed her at Market Minute on X. And